Hello, everybody, and welcome to July Price Know-How Snippets. In this edition, we have myself, Mike Boswell, and Ian Chisnell. Catherine is on holiday at the moment, enjoying some vacation time. So I'm going to start off by talking to you about some of the fundamentals. I'm then going to hand over to Ian to talk about monomers and polymers, and then we'll wrap up at the end. So I've got to say, it's been a pretty dynamic time in the world, as we've seen with the situation between the US and Iran and the opening and closing and opening of the Straits of Hormuz. But in terms of crude oil, the general trend has been very much downwards. So I'll start off by talking about the price in dollars per barrel and then in pounds per ton. So back in May, the average price for a barrel of crude oil in dollars was 102.32, and in June that fell to 84.38, a drop of almost $18. The minimum fell from 91.12 to 72.6, a drop of 18.52, and the maximum fell from 114.44 to 97.81, a drop of $16.63. That gave a range in terms of material price, quite significant. It went up from a range of 23.32 in May to 25.21. For those who prefer our prices in pounds per ton, this is pretty interesting. In May, the average price was £573.85, and in June, that fell to £477.07, a fall of £96.78, almost £100 a ton in a month. Probably equates roughly to €100 per ton in real terms. In terms of exchange rates, there was some influence on the back of that. Quite interestingly, the pound actually strengthened slightly against the euro. But probably the bigger story with the view of the situation in Iran coming to some sort of conclusion and a ceasefire and then eventually a peace deal being done meant the dollar got stronger. So in terms of the dollar against the pound, it went from 135 to 133. Back to that euro, it went from 115 to 116. You've taken interest in the euro against the dollar, that went from 117 to 116, again illustrating that strength of the dollar against other currencies. So with that, Ian's got plenty of news. Over to you to talk about monomers and polymers, Ian.
Many thanks, Mike. So as Mike has just sort of talked about, we've seen some significant falls in the cost of oil, and that is feeding through to some relatively significant falls in the cost of naphtha and consequent costs of monomers. So ethylene saw a drop of €200 a ton down to 1445 euros a ton, and propylene C3 saw a drop of 190 euros a ton down to 1365 euros a ton. I think it's worth at this point making the comparison between where we were before the war started. So we're still with ethylene at a 350 euro ton premium over February pricing, which was 1,095. And with propylene, we're at a 400 euro premium. It was 965 euros a ton back in February. I think it's also worth noting that back in February, the differential between spot pricing of LDPE compared to the contract pricing for ethylene was in the region around about 130 euros. Based on where prices are heading, where I believe they're going to be heading in July, we're almost looking at parity between the cost of LDPE and the cost of ethylene. It's an extremely worrying situation for European producers because they're now going to be back to in the red. And with the EU trade deal with the USA coming into force and 0% duty on imports of polyethylene from the USA, and also polypropylene, it's further pressure on the European petrochemicals industry. So these monomers, how they're going to translate into sort of in terms of polymer pricing? Well, it depends on the point that you're starting from, because if you look at the start of June to the end of June, we saw price erosion for the major LDPE, HDPE, PP copolymer, all looked at around about a 300 euro a ton reduction throughout the month. So we already saw a lot of erosion in pricing due to a lack of demand throughout June. So whilst we've seen these big monomer drops, we've already seen more than that drop in prices throughout June. I am anticipating that we will see some additional drops in July. It's very competitive out there. Demand continues to be relatively poor and supply is extremely plentiful. So we're going to face a little bit of a battle. So we will see some drops, But you've got to be careful about the point that you're referencing from. You're talking about yesterday at the end of June price, or you're talking about the 1st of June price, because they're very, very different things. So it's a rapidly evolving situation. We will do our best to keep you informed. It is only the 1st of July as we record this, but be prepared for sort of drops and expect some a little bit of volatility probably as we go through the months, depending on how demand looks. If we see strong demand because everybody's destocked, you may see a little mini spike, but the general expectation is for us to hit a plateau of sorts relatively soon, and then we'll start to see some much more gentle decreases sort of later on in the year. Quite a lot for me to go through there. But if you need any more information, then please don't hesitate to get in contact with myself or your distribution team.
Indeed. Thank you, Ian. And Catherine's back next week, of course. And I think, as Ian has pointed out, to some extent, probably the market has already priced in some of these changes. But again, I'd emphasise, please talk to your distribution team. They'll be pleased to help you with regard to how the market evolves in July. So thank you. We'll be back in August. All the best and have a good month.
Thank you.